Hi, thank you for checking out the 54th posting of our municipal market update. My name is Adam Bauer. I serve as president and CEO of Fieldman Rolapp Associates. Fieldman Rolapp Associates is a municipal advisor to government, and we, on a approximately monthly basis, post what we call the MMU to give market participants and our clients just an update on the market. What I started doing recently was adding just kind of what's in the news as I'm recording this. First of all, the data is as of July 12th. I'm recording this Tuesday morning, July 16th, up here in Napa, California. I'm at a California Association of Black Educators, and I have a presentation on geobonds tomorrow. So certainly enjoying the beautiful environment as we do this. But what's in the news? So as I said, the data is as of July 12th. On June 28th, we had the first presidential debate of 2024, and there's just been a whole lot of chatter about that. I won't get into kind of how it went. If you have any interest in that and you haven't heard, you can certainly do some searches to kind of get a sense for that. But then also what's taken place is on this last Saturday, which was July 13th, there was an assassination attempt against a former president, Donald Trump, and also a candidate. And so certainly that has really dominated the news, along with a Republican National Convention. And also that same president had some real legal woes with some documents. And it looks like for now, those have been alleviated as well for him. So just a lot going on the political side of things that we haven't seen, as you're going to see. I'm going to move through pretty quickly on our presentation this month. Hasn't been a whole lot of movement in rates. So hopefully that all that political stuff really hasn't had a lot of impact. But something that's been a real positive is it does appear that inflation has finally calmed down. There was an interview with David Rubenstein and our Fed chair, Mr. Powell. And one of the things that was talked about there was that I think the Fed has seen that inflation has cooled. And one of the statements that I'm summarizing here, but essentially it was, we don't necessarily need to get to 2% inflation to kind of hit the target because of the long and variable lags that take place with monetary policy. I think what Powell was saying is we're getting very close to it and we can see a trend that may be enough to start the easing. And I think that's what a lot of investors are expecting, something like a September rate cut. So we will see. There was a thought that we'd have 6 rate cuts when this year started, and certainly not going to have that at this point. But that's what's in the news as we record. I am going to move through this pretty quickly this month because things haven't really moved that much. And so if there's any questions that you want to follow up on, please feel free to follow up with me or anyone on our team. First slide, you've seen this many times, and those green bars represent the rate increases by the Fed. The yellow bars represent the aggregate of those, and then that blue line represents the 10-year Treasury. And you can see it's trended down just a little bit, but not much has changed on this front, and we'll have to figure out how to rework this graph if we actually see a decline. Maybe we'll have to change the scale to make sure that we show that. But things have been, like I said, pretty stable since we've last recorded this in June. I've really tried to show you how that U.S. Treasury curve has changed over time. You can see January 3rd, 2022, which is where I've said is really where things started to change. And you can see that looks like a traditional yield curve, goes up over time. And you can see today, or as of last Friday, 7/12/2024, somewhat non-traditional yield curve, where you have some of the shorter term maturities have higher interest rates from some of the mid-year or midterm maturities. So not much you can do with that at this point. Just want to show you the changes that we've seen during that period of time. This is a chart. It's kind of my favorite chart, I think. It just shows you what happened the month before that date. So if you see July 1, 2024, you see negative 0.18. That means that rates went down in June by 0.18, and they haven't changed that much since then. The next chart really brings that current to July 12th. But this was trying to give a grasp for how things have changed over time. And generally, we've trended in the right direction, but not by too much. You can see here that 30-year maturity, which I should have said in the last slide. That's for the 30-year MMD, municipal market data, and that's for the AAA credit. You can see here we look at 30 different maturities, and the blue lines represent the range of rates going back to 2005. Green line represents as of July 12th, 2024. You can see slightly elevated on the short maturities and pretty much average for the rest of the yield curve. But what you also might notice here is between July 1st and July 12th, not much has changed in that 30-year maturity, just a few basis points. Here we try to give you a whole lot of charts just to give you a sense for what's going on in the municipal marketplace. So here, just sharing that with you. Inflows and outflows, it's been a real mixed bag. Sometimes you have inflows into everything. Sometimes you have inflows or outflows from everything. I think here what we've seen are some inflows into some of the high yield funds, but not as much into the higher credit funds. And we'll see how that trend changes over time. Volume has picked up. So what I've been showing you for a good portion of the year is that these bars have been below the lines. And what that represents is a low amount of volume. That certainly is not the case now for 3 of the weeks. You can see we're well above the historical averages. So volume definitely has picked up. So interesting point. I've said there's not been that much inflows into the municipal funds, which is a major purchaser. So that's the demand. But then supply has picked up, but we still see rates trending lower. And so we'll see if the supply continues to be as robust as it has. Can that trend continue of having rates continue to trend lower? Economic data is on the horizon. Certainly, some of those have already taken place, but certainly points that we need to monitor. And if they come in significantly different than the expectation, could have an impact on the market. So lastly, I leave you with our Fieldman Registered Municipal Advisor team. Encourage you to reach out to any one of these individuals if you have any questions or would like further detail on any of these. But I thank you for your time. I'll see you in August, and take care.